Hey, Blakester,
What's
what's
up,
going
Jeff? How we
on?
doing?
Another day in paradise, you know?
Sorry, do you mind if I call you Jeff? Does that work, or you
Uh,
rather go Jeffrey?
Hey, I get called all sorts of things, you know?
Just don't call you any bad names. I was really interested in looking at NVDA. It looks like we had a big old nothing burger, the dreaded
Yeah, I
IV
mean,
crush.
you know, I kind of figured we get a drop, so I expected we get a pop in the market, and just sitting still is the thing that kills the most people, I think. So that's what we're doing.
Yep, that's exactly what we're doing. And I don't. I mean, I figured that. I don't know. I don't know what I thought, to be honest with you, Jeffrey. I thought I expected a little bit more, but because it was like an 8% implied move, and I mean, I guess we did get that, but then we opened relatively flat. So if you had calls or puts on Nvidia, you got burnt.
And I bought a debit spread. It's good till tomorrow, so we'll see if it actually
Oh,
plays out or not.
there you go. Smart man. Way
Reduce my
smarter
risk.
than.
Yeah, reduce
Yeah.
that risk, and we'll see. We'll see. It does
Yeah.
take a move higher, but if it's not as big a risk as if I had just gone straight calls or something.
Right, which is what I did. I didn't do a spread. I just went calls, and I looked and I was like, "Oh, the IV's gone. There goes contracts." It
I
was just
basically ri-
light though,
I
little
basically
lotto.
risked $1 to make $1.50 potentially. So um,
Hey,
we'll see.
that's better risk reward than what I did. I risked like 50 bucks. I made nothing. I did like a strangle. Didn't work. But I'll get that off the screen.
Alrighty.
There
I
we
think
go.
Kane's supposed to be on here and join us. There he is.
Yeah.
Just got on, yeah. Good to see you guys.
Hey, good to see you too. How you been trading this morning?
Uh, you know, not too much for me. For me,
Yeah.
it's mostly another kind of choppy day, although volatile. For it's on a day-to-day basis, we're really just chopping sideways. So I haven't
Yeah,
really
it's
gotten too much going on so far.
been that way all week. I think there was a GDP.
Yeah,
gr-
GDP print this morning.
Yeah. How did that look? I didn't get a chance to look at that.
Came in 3.3.
Yeah, it was kind of hot, kind of hot. Like
Really?
GDP doing well. Um, kind of against the argument that the Fed is going to cut in September. Actually,
Hmm.
well, it gives it less reason, the Fed less reason to cut in September. So we did see initial bond sell-off on that, but then it completely recovered. Now bonds are going up.
Bonds going up, huh? Well, we got Alex in the house now. What's up, Alex? How are you?
Good man. I'm on your coast today, Kane.
Oh, nice. Which part?
LA for right now. We have a wedding in Santa Barbara on Saturday, but we flew in to check out the city for a few days.
There you go. Are you seeing all the burnt out plots?
uh Not where we're in West Hollywood right now.
Okay.
There's a lot of gay bars, but there's no burnt out plots.
Oh
Didn't quite
shoot.
make it to West Hollywood.
Yeah. Yeah, no, it's cool though. But yeah. So, well, gentlemen, how you doing, Jeffrey?
I came on just to fill in, I guess. Jack on vacation.
Yeah, yeah. Isn't Jack always on vacation? He goes to Florida, goes to Colorado. Where is he now?
I think he went to Telluride. He's taking a motorcycle trip for a
Oh,
week. So
nice.
Nice.
Good for him. Yeah, I kind of like being on the West Coast, Kane. I gotta say, it's like I feel like you wake up early, the markets are open, then you're done.
Yeah,
It's
you
true.
end early, but by the time we're done, and by the time I'm done, because I work a couple hours, a few hours after the market closes, and I'm wiped out.
Yeah. Yeah, yeah. Yeah, you have to be an early riser.
Yeah,
Real
Did you
early.
when you were at PIMCO, were you on the West Coast?
I was on the West Coast, and I started at my desk. I was working, or like at my desk and working by 3 a.m.
Wow.
Because
That's
bond
crazy.
markets open at 5, right? So
Yeah, yeah.
5 a.m. Pacific. So I was there by 3. Yeah.
That's crazy. How many years did you do that?
Oh, too many. Probably 9-ish.
Oh man.
I'll
In your
stay here on
20.
the East Coast.
Yeah. I'll wake up at 5. I don't know about 3. What time did you wake up?
I'd get up at like 2. In the morning, I just cut my routine into as little as possible. Basically, shave, brush my teeth, get dressed, and run to the office. So I
That's
was
crazy.
up at maybe 2:30, 2:40. And I always lived very close, so I never
Yeah,
wanted to commute. Yeah.
that's crazy, man.
Hey, no
That's
traffic though.
Exactly. Yeah.
yeah,
Never any
No
traffic.
traffic at all.
yeah, yeah. Traffic is LA does have pretty bad traffic, I will say. It took 45 minutes to get to like a 15 miles. So
Oh yeah.
Yeah,
It's
that's
like
pretty typical.
Dallas.
Yeah.
you said what, Blake?
It's like Dallas, you know?
Oh yeah.
It's
Uh-huh.
just crazy.
Yeah, I've never actually been to Dallas. I've only been to the airport.
Hey, if you're gonna drive on 35 in Dallas, just be ready.
I will. Doug, no, Doug, nice work. You, Doug. Graham is saying don't complain. It's 1 in the morning in Australia now. You're right, Graham. We shouldn't complain.
That's
Uh,
right.
what a boss showing up at 1 a.m. to watch us.
Hey,
What'd
I
you say,
mean,
Jeff?
I was gonna say, if you want to trade, you either live where the markets are, or you make do.
Yeah,
So
yeah.
all make our
Um,
choices.
yeah, I don't know. I really feel like if you do, if I feel like I wouldn't care as much about anything in California, to be honest, because like you wake up and like I feel like the East Coast, like everything's already happened. I don't know. Uh, but yeah. So, but let's get into it. So, I did see yesterday I was on the plane, but NVIDIA, pretty much as expected, right? I mean, well, a little bit of data sales, less data sales revenue than people wanted, but I mean,
Yeah,
still
like
solid revenue.
200 million and a 40 something billion.
Yeah, $40 billion year over year, $46 billion year over year increase, right?
And missed by just a rounding error. Oh, oops. So
Right. It just doesn't seem. I mean, look, I don't. Again, I'm not saying I'm like want to be a bear or a Chicken Little, but is it real? I mean, 46 billion on Nvidia's already massive like revenue base. I just another 40. I mean, it shouldn't. I feel like things shouldn't grow like that, but maybe we really are. Maybe AI really is all of that. I don't know. Opinions?
what I found interesting, they sold exactly 0 H20 chips to China.
Yeah. Yeah. That's a big head.
So
That's a big tailwind if they do open that up again.
so they're sitting on all that stock that they produced, and no wonder they're halting production because they're sitting on all of it. They haven't sold any in months.
Yeah.
So that's exposure. It's either they're going to eat that cost of production, or if the market opens up, do they pay the 15% to the government, or do they fight that? I mean, I don't know. It's an interesting, I guess, narrative going on in the background there.
Kane, thoughts?
Well, yeah, I think there's, whether it's the H2 chips or whatever, there's going to be demand, right? So they're going to see continued sales. They're still the biggest fish in the pond by far, and it's going to take a while for others to catch up. So if you want the best and latest chips, you got to go to NVIDIA, and if those chips can give you an edge, you're going to pay for those chips. So at least for a while until other people catch up, I think NVIDIA will stay strong.
Although the new AMD MI650 chip does put out performance similar to the H200. So that's
Hmm.
and they're up more this year than Nvidia. So as far
And
as
farther from
as far as
all-time high.
making money, AMD may be the better opportunity. Nvidia being the big dog, it's gonna be hard to push it up. They gotta add $4 trillion of market cap to double their share price from here.
Yeah. Yeah. And NVIDIA's, I mean, AMD hasn't even hit all-time highs again. So we
So
still got some.
investment wise, if we're here to make money and capture, larger upside potential, AMD, I feel like has a lot more room to run, especially at the 6 to 8% of that server space that they may be able to obtain in the next year or so.
Look at that Cambricon trade we were talking. I saw that on the CNBC after we talked about it.
Yeah, look at that
I
sucker go.
think they're watching the show.
This is the NVIDIA of China, Kane, if you
Yeah.
didn't know.
I did not know. Very interesting.
They took over, they went from 5% market share to over 55% in the last 8 months, 9 months in China,
Well,
as NVIDIA is suffering from the tariffs.
Yeah, it's been skyrocketing. Yeah, CNBC, I think one of the interns watches Profit Panel.
Probably.
They were talking about it. So AMD, I wonder what you like this one. You like this ticker, don't you, Jeffrey Soxel?
Yeah, I mean, if you're going to try to get leverage on this sector, it's a good one. It's struggling to break on out of this consolidation we've had for a couple of months, though. So
Yeah. Yeah, the question is just like it's gonna keep like you said with Nvidia, it's like it's gonna slow, right? Like I mean, the growth is going to slow. Like, is this problem? I mean, this is an extraordinary run from basically April to now, March to now. Uh, Even if revenue keeps on beating and growing, it's like how much can this just how long will it take this to double if ever at this point?
yeah, they need another pullback so they can do another 100% gain.
Right, I know. I know. I mean, they threatened it. Everybody threatened it back here like last week, but to no avail. To no avail. And then SPX, I'm chart poor, or I am monitor poor today. So I'm just clicking around on my small laptop screen. So
And that's kind of the way it goes when you travel.
yeah, forgive me if I'm not as smooth and fluent as usual. Um, But yeah, I mean, flirting with all-time highs. We briefly hit it this morning, I believe. We briefly hit all-time highs this morning, but a little bit of a bounce off. Kane, what are you seeing on gamma levels?
Gamma, it's kind of spread all over the place. That generally means chop.
Yeah.
So a fairly wide range chop. I'm looking at on SPX. Let me see those levels. I gave them out on my channel a little earlier. I'm looking at, I mean, the gamma is spread from 6430 all the way to 6510. That's a pretty wide range, but I'm looking at more in between 6450 and 6490.
Yeah, okay.
So,
Hey, Gang,
For this week or for today or what?
for today.
Yeah.
hey, Kane,
But
I've been asking a few people about this. If you look at the 0-day volume down 500 points on SPX, there are thousands of contracts that trade in there. Why?
down at 5,000.
Yeah, just 500 points down, like around 6,000 and then
Oh.
down to 5,000.
Let me
Yeah,
take a look at that.
Yeah,
Let's see.
it's crazy. I mean, thousands, like thousands and thousands every day. On those 0 days. It's crazy. You only get like 20 or 30 cents per contract. But they're in the futures too. So there's futures contracts trading right there too.
Do you know if it's purchases or sales?
A little bit of both. It looks like a lot. About 10 days out their purchases, and then about 0 days out their sales. So I'm not sure if it's a hedge strategy or what, but
Yeah,
I mean, the volume was crazy when I saw it the other day. I happened across this. I was looking at traders on K-Info. I saw a guy that's been trading 10 and 20 lots every day. He sells them at about 9:45 in the morning and collects, and lets them expire worthless every day.
yeah.
Um, and I mean, that's a huge amount of capital he's probably using, unless he's got like one of those 500x brokers because he's international. But he's made something like $30,000 in the last couple months doing this every single day. And I was just like, what the heck? Why is this even a thing that you can do?
All right. Yeah, that's funny. I'm So we're right around 6,000, you're saying? 0 DT?
Yeah, about 500 points down. You can see the volume on like anything that has a volume for SPY, SPX. I'm at the little platform though. I didn't load a platform.
Yeah, it looks like I mean, that guy that you talked about, he's just basically selling. He's collecting income.
Yeah,
But
I know what he's doing. I just it's crazy.
like, yeah, I don't know why the market maker's selling it to him, but yeah, sounds like a bad deal for a market. But you know what? The market maker, as long as he can make a bid ask, then he's okay because he's.
Yeah.
And then you're seeing it in the futures because that's probably the market maker hedging himself. So the market maker sells it to whoever's or buying it from whoever's selling those contracts, and then they got to hedge themselves. And on SPX, the only way they can hedge themselves is in the futures market.
And see
It
what
seems
was
like a pretty
crazy.
foolproof way to make money. So
What was
zero.
crazy was I was doing the futures trade. I was selling those futures contracts. I did 10 in a row so far. And I made a few $100 just, playing the 0 days. It's so crazy. Like that this premium's even there.
Yeah.
Anyway,
Is that the hack? It's just
maybe.
sell five, sell basically impossibly out of the money puts.
Yeah, maybe it would take a bigger than 3 standard deviation move to go get those.
Yeah.
Yeah.
It's like it's like something like a quarter percentage point chance that you would get in trouble any given day. And we'd hit
At
circuit
what-
breakers before we got there.
Right. Yeah. What strike is that? 5,000, you said?
Well, it's in that range down around 6,000 and below.
6,000. Yeah. Wow.
That's an
Interesting.
insane amount of capital he's putting into it, though. That's
Yeah.
Unless he's got the leverage. If he's got one of those leverage brokers, because he's international, he was like in Singapore. If he's got
okay.
one of those brokers, he may only be putting up like 20 grand. It's kind of crazy. I mean, I was like, why is this even a thing?
Hey, if you can exploit it, then why not?
Yeah, I asked Jack since he was a market maker, and he was like, "Well, this has to be some sort of glitch." Like, and since you're a gamma trader, I wonder if you could come up with any reason why this would be down there. And it's just a weird anomaly, like the
Yeah, it just
thousands. I
looks
mean,
like
it's
they
like right
can.
at I was gonna say on the futures, 59.50. There's 2,400 contracts, and then 59.40, another 2,300 contracts, and then 59.30, another 1,400 contracts. It's just crazy on these 0 days. That's in the futures market.
Yeah. Well, the future market is most likely the hedge. The positions actually in the options. Yeah.
But then you go down and look at the SPX cash index. I mean, 59.95, 2,200 contracts. And then 59.75, 2,800 contracts. Just craziness.
Yeah.
So that's an
How much
anomaly.
capital,
It's
how
something I
much capital
found.
would you have to put up to sell to do what he's doing?
If you were in the US, you're gonna have to put up upwards of $500,000 per contract
Yeah.
without margin.
right.
Right.
Yeah.
Dang. All right. Well, maybe the folks at home can't really do that, but it is
Yeah.
interesting.
Now, in the futures market, you can do it with like $2,000 per contract.
Right. You're leveraged highly in the futures market. Yeah.
Yeah.
Because that's what I was doing it with $2,500 a contract in the futures market. Of course, you only make, their futures markets options are priced in points. So if you're looking at a 0.3, you're actually only making $15 per contract. It's $50 points in the futures market. But I was like, this is wild. Why is this premium here? So I thought it was something interesting to talk to you about, Kane, if when I saw you.
Yeah. Yeah. It's crazy that it's there. Yeah.
Very interesting. So update on the element position. I did go long on that. Also sent out. I also we did a debit spread in one of my Jeffrey, that element trade we were talking about. I'm calling it element because there's like an electrolyte drink that has basically the same abbreviation. Lockheed Martin. So did go long on that. Did go debit spread for Wave Trader, I think. If anybody's in Wave Trader, I think we did debit spread on Lockheed Martin. So yeah, just giving you an update on that. But any other tickers you're looking at today, particularly either Kane or Jeffrey?
My
Yeah, there's good. Jeff, you can go first.
I was gonna say the urban trade I was mentioning, Urban Outfitters. We were talking about selling that put down at 62. Looks like with the earnings, that's gonna go out for full profit, even with the drop. So
Nice. When did you sell that? Was the expiration date? Today?
I sold it last Friday. So and that was tomorrow. So I mean, unless it decides to wet the bed here, follow the bunk bed later on today, I'm probably gonna book that one out full profit.
Nice. Nice. Yeah, me and I think last week Jeff and I sold a Rio put. That's should be well, it's September 19th, but it's looking pretty solid right now. Um, Rio just because like they were meeting with Trump. There's this copper mine in Arizona. It's being held up from being developed, but if it is developed, it'd be like turning the US from the 5% copper from a producer of like 5% of the world's copper to like 15 or 20. So I'm pretty sure seeing what happened with MP, seeing what's going on with Intel, feel like similar things could be happening with a lot of these mineral resource companies in particular and state and very the companies that are very important to like the American state. So anyways, but that's playing out nicely for anyone who did take that. I don't know if anyone's here who took that trade last week with me and Jeff. Bodine's asking, speaking of copper, what caused those crazy drops in copper a few months ago?
Tariffs,
Tariffs.
tariffs.
Yeah,
Yeah,
tariffs.
yeah. What's the copper? What's the copper future?
It's
Forget.
HG, HG1 exclamation point. There you go.
Boom. Yep. Look at that. Oh, that's from July even. I don't know. I don't know what caused this massive. What happened? Something happened. I feel like.
It was tariffs.
Yeah,
Tariff
it
caused the
was
pop
tariffs.
and the drop.
Yep.
Yeah. Was this what happened on July though? What was the news? I forget.
He was going to tariff all copper coming into the U.S. at 50%.
Right. Yeah. Yeah, and so that's why, look, he wants to tariff all the imported copper. He wants to increase domestic copper. Uh, Rio is basically, if that mine does get approved, it's like I think it's owned by the Apaches, and so they're suing in court to hold to not because it's like on their land, they don't want it to be developed, and um, so if they win that or if the administration wins that lawsuit and actually does manage to get developed, Rio will be the prime operator of that mine. So they're in a pretty good position. And they were meeting with Trump in the White House, and so yeah, that's something to watch out for. Let's see. Kane, any tickers in particular you're looking at?
Yeah, I'm looking at shipping. STNG, Scorpio Tankers.
Scorpio.
Yeah,
Nice.
that
I like this
and
ticker.
so that's beginning to take off. It to me that's starting to break out of so call that a ascending triangle right there. If you did a horizontal, basically right where it is right now. Well, actually just under it, but yeah, right there. Not and then you've got the obviously that short-term uptrend right there. Shipping, I think, it looks like it's turning around. Scorpio looks like it's turning around. Once we get through all the tariffs, like once all the tariff deals are done, then we know exactly where the tariffs stand, and then the global shipping and trade happens again at a faster pace. So
Mhm.
that's my play on STNG. I also like a lot of home builders and construction right now.
Oh,
So
really?
lower interest rates is going to benefit those. And what we're seeing is that over the last few months, the home builders and construction stocks are starting to outperform. So I'm looking over there as well. I see this question
Interesting.
from James. He's asking if I'm adding to a weak position. And I don't know about you guys, but I never put additional money into a weak position. So the way
And
institutions work is even if you have extra capital, you add it to your winners. right? So
Mhm.
something that's winning, so you go on a buying campaign, well, each buy is above the previous buy. So that's the institutional way, and I don't see any reason to do it any other way. You don't buy more as it's going down. That doesn't make sense.
Right. If you're losing, why increase your losses?
Well, it goes back to in the economy. This is a fallacy of, I guess, when people associate the economy with the stock market. In economics, higher prices bring lower demand, and lower prices bring higher demand. So when you're down, you add. That's an economic kind of concept. But in the stock market, when things are down, there's less buyers. When things are up, there's more buyers. So it's backwards.
Right.
And this, if you think like the stock market, you add to the winners, you don't add to the losers. So unless you go into it with a plan for a rescue type situation, I wouldn't do that at all. When I start the trade, I usually go max position risk, and then I don't add or subtract to a single position. I usually diversify across positions for me.
That's
Yeah. Yeah, it's kind of what you just said, Jeffrey, is kind of what I do for day trading on well, either SPY. If anybody's on the Telegram, those daily SPY alerts, just like the supply and demand zones, right? Because you don't want to get like basically every day, right? If a stock jumps, if you're doing the futures, it jumps like, well, if it's up 10 points, it's like you don't want to, there's an basically there's an oversupply now, right? You don't want to get in when that stock is, I mean, the way I trade is like you want to basically take the reverse of where the supply and demand zones are. So if you're on like MES, you don't have to actually do this thing. And you're on the 1 minute and you have like the supply and demand zones, right? And when the stock is up, right, that means, and if there's, especially if there's a past like trend, right? If there's been tops or something. So like for instance here, triangle, something shape, rectangle, right? So why did price consolidate here and then go down? There was more supply, right? Then buyers got down here. There's more buyers than supply. So this is the demand zone. This is the supply zone. This is when this is how I trade on intraday stuff. And those daily SPY alerts everybody gets, this is how we do it. So it's like the opposite of, it might not be exactly what you were saying, Jeffrey, but it did sound like I just wanted to, it was like basically you don't, it's not exactly what you, in the markets are not exactly like what you would think in like an economic market or like a micro econ, right? It's like this is supply, this is demand. This, because it's gone up so much, this is not demand at this point. This is not demand when it's already up. If you're on the futures, 20, $25 or whatever. That's like meaning that the supply uh of and the demand is running out because it's already been on this massive run. Why would you try and get in here when there's already been this massive run up? It's better to wait until you see this consolidation pattern here, when you see the supply where it's bounced off of, where there's not as much demand, right? And it comes back down into a better demand zone where people are willing to buy and then go up.
Yeah, so based on what Alex has drawn on the screen, what that means is that if you enter and it drops, basically you entered probably at a supply zone, and you thought maybe that was the demand zone, but it actually ended up being supply. So if you're saying, "Oh, I want to add to it because it went down," then the best thing that you could do is add to it when it reaches that demand zone at the bottom. But even if you did that, then what does it take for you to actually make some money? It's got to go all the way back up into the supply zone, and then you've made a little bit of money because you average it down. But then you're right into a supply zone again.
Yeah.
You can't positively expect that it's going to go even higher. So
Yeah.
your risk reward is off at that point. Your potential for loss is greater than it was before, and your potential of making the money is just a little bit. It's a tiny bit of reward, not a large reward compared to that risk.
Yeah, it's just so much work. You're like thinking, oh man, I gotta get it to here, I gotta get it back to there just to make like a, couple, whatever, a small winner. So, yeah, pretty cool stuff. I'm not sending any of those out though, because obviously if I'm on vacation traveling, I can't really monitor it closely, but I will be back to that, folks, next week.
And we got a holiday Monday anyway.
I know.
That's right.
That's why it worked out. It worked out. I wonder, I do, so I liked what you were saying about ST&G. I like ST&G. We got in on it a couple years ago, just in like a long-term buy and hold portfolio during the Suez crisis, or not the Suez crisis, I guess it was the Red Sea crisis, but that thing popped like 2023, right when the Houthis started bombing and missile firing. Man, this thing was a good winner. That was a nice, like it was over a double, honestly. But I do like that thesis though, because I haven't thought about STNG for a while. Like I think shipping stocks that made shipping stocks really front and center of people's minds. I haven't really thought about it for a while, but I do, yeah. I mean, I guess if the tariffs do get sorted, trade does increase, and we don't have a global financial recession, then yeah. STNG is a really good company. There's another one too. I forget what it is. Maybe I'll do some. There's another one I liked. I used to watch, but STNG is definitely like the most. I feel like it's the highest like marquee name for tanker companies. Like there's Maersk and stuff too, but STNG, and they transport they transport oil, right? Are they oil tanker company?
I think they do, yeah.
Yeah.
From what I remember.
Tanker, yeah, oil tanker. Yeah.
Yeah, there's not many tankers that carry cargo as far as containers.
Yeah.
Yeah.
I didn't know if they did like both, but yeah, they're just oil tankers, I believe. Very cool. Good earnings. Good earnings. I wonder, so are there, so with the NVIDIA earnings out, like high beta names, are we back to like Rocket Labs and Ion Qs, popping?
Well, that definitely seems the case for today, at least.
Yeah.
Whether it keeps on going is a little bit of a question mark for me. What do you think,
That's
Jeff?
the thing, when you're sitting at all-time highs, what's the most likely thing? I mean, all-time highs do attract more money, pushing higher, but at some point we're out of buyers. And when sellers outnumber the buyers, we go down. And it's easier to, what goes up must come down. That's, been an idiom we've said for years and years, for millennia probably. So probably going to pull back at some point. How big a pullback? I don't know. Pullbacks are healthy. They let us go higher again. And, so, but the irrationality can remain until, we're all out of money.
Yeah.
I think it really just depends on how much money is on the sidelines. That's not something that I've looked at for a while. Probably should. Like how much money is sitting in like money markets and that just waiting to be put to work. At some point, you keep on seeing all these all-time highs, all these all-time highs. Now you've got the Trump put in place, you've got the Treasury put in place, you've got the Fed put in place. So at this point in time, it seems like the government is fully in place to support an upward movement in the markets. So there's going to be some fear of missing out. And then if there is still cash on the sidelines and that comes in, then that's your last push upwards. And that's kind of, I think, my base case for the rest of 2025 is at some point that money comes off the sidelines and we hit some crazy high in 2025. And then we got to be really careful for 2026.
Well, see, I have a different perspective on money on the sidelines. For every buyer, there's a seller. For every seller, there's a buyer. And right now, when you look at the gross margin accounts, we have over $1.5 trillion of margin used in the market right now, at the highest number it's ever been. So if there was cash on the sidelines, why are we borrowing $1.5 trillion to buy more stocks? It's kind of wild.
Are you contesting that there is not cash on the sidelines?
We just may be stretching this rubber band a little tight. I think that money markets aren't really cash on the sidelines, even though that's a common kind of financial narrative. It that money market money is maybe it's collateral for margins, maybe it's something else, maybe it's just money that needs to sit there for some other reason. I don't believe it's necessarily money on the sideline. It's just my view on that money market money.
Institutionally, most money market stuff is waiting to be invested. So, for example, when I was at PIMCO, one of my main jobs was investing excess cash. So, if you were a portfolio manager and you had 100 million under management and you only invested 20 million, it was my job to grab your 80 million and put it into something that was liquid. A lot of that would go into money markets, and then suddenly you're like, oh well, I need to allocate another 20 million. Then I had to go and sell that 20 million in money markets and make that cash available to you so that you could go and express your view somewhere else. If for whatever reason that you need that stockpile of cash because you can only be X% invested and you needed a certain amount reserved in cash, then you're absolutely right. But if there is like excess, like, hey, I'm just waiting for a great idea for me to put my money into, then a lot of that is going to get swept into money market or type of instruments. So it really does depend though. I mean, if we're in an environment where portfolio managers are like, hey, we need cash. I'd rather keep my powder dry, then absolutely, yeah, that's not going to come out of the money markets at all.
I mean, there's 7 trillion in money markets. My point was that 7 trillion is not going to flow to the stock market.
Oh, that's true.
Yeah, yeah. Some portion of it may, but we're not going to flow 7 trillion out of the money markets into the stock market. It's just not sitting there ready to go into the market. So, when you hear that number, that's a fresh number from August 2025 too, right here. So
yeah, so for sure, 7 trillion isn't going to go, but is half a trillion going to be made available, or 250 billion, something like that.
yeah, some small fraction. And I don't have a feel for, when you manage money for institutional clients, what portion do they keep ready to liquidate, in easily accessible money market type money. There is a big difference between liquidating a $20 million stock position and pulling 20 million out of money markets. So
yeah. And a lot of it, like you do need to have a cash reserve because what if your client pulls out some cash, or if you're, for example, you're an ETF and people, or you're a mutual fund and people are like, oh, I want cash. I want to pull 50,000 out of my account today. I'm like, okay, well, I need that 50,000 to give to you, so I can't just put everything 100% invested.
right, and that's kind of my point. That's it. There's just a misnomer that money sitting on the sidelines of that's like 7.19 trillion is accessible to the market, but it's not really sitting there on the sideline for the market. It's more operating cash, probably the majority of it anyway.
It's very interesting.
It's a lot more complicated, I guess you might say.
Yeah, it's not just a pile of cash waiting to go in the markets. That's absolutely true. Yep.
Yeah. Yeah, the leverage is an interesting point too. I don't know. I mean, pullback.
Margin, you could attribute that. I think because so many retail traders came into the market after COVID, and retail traders use margin. So I don't know how high we are versus historical, but I would imagine that at least some of that is due to the influx of retail traders, right? Especially through platforms like Robinhood, Webull, like that.
I mean, because if you're trading options, I mean, most people are using margin accounts for that, so that's probably going to factor into it.
Alex, if you type in M2SL, money supply hitting all-time highs here.
Yeah.
New treasury report out today, yesterday showing a giant pop in the money supply.
Do you know a ticker for China's M2 money supply?
Give me a second.
And then if he gets that ticker, Alex, just hit that plus sign and put them both on the same chart.
Yes, sir.
Yeah, It's CNM2.
CN
Yeah, Charlie November Mike 2. You might
And
take it off
it's
percent.
you're all the way back to 1959. Just do it since like 2020, since COVID. All right. Yeah.
Is that good enough? Is that
Yeah. So yeah, we're always complaining that we're printing so much money, and we are. In my opinion, it is out of hand. But take a look at China. I mean, they're they're almost double what the U.S. has done.
yeah,
That's
that's
pretty. I mean, inflating. Central bank inflation. This is global liquidity, and it drives risk on assets higher. Bitcoin, ES, NQ, big tech. I mean, it's all going to push things higher because that money finds its way into high risk assets to get big returns, and that's it's what happens.
Absolutely. Yeah. Yeah,
yeah,
just think back
wow. China's
to
just been
COVID
printing.
when they were giving everyone free money. Where did that go? A lot of people stuck it into their brokerage account or opened a brand new brokerage account. There was a whole wave of brand new traders at that point in time, especially since a lot of the brokerages went to zero fees or very low fees. And then a lot of people went and they just spent that money like crazy. They bought a new car, they bought a new stereo system, they bought whatever they wanted, and so that just goes right back into the earnings of companies. And so yeah, it just flows right back in to high risk assets.
Yeah, China was printing because of deflation, right? They had like deflationary pressures. Was that the line?
Yeah, yeah. So I mean, there well, so there's a couple things that go on. One is the deflation, but also they peg themselves to the dollar, right? So they don't let it float too far away. So if they have to keep devaluing themselves in order, so by printing more and more in order to keep that peg.
Wow. Where does it end?
That's the
I
That
mean,
question
is
you're
the
not supposed
question,
to
right?
ask, Alec. You're
I
not
mean,
supposed
that's
to ask that question.
if you just look at like just historic, the last like 20, 25 years, man,
Yeah,
it's just I mean, crazy,
It ends when everybody's a trillionaire.
right?
that's right.
Everybody's a trillionaire, but a piece of bread costs $1 billion.
It probably costs $1 trillion.
Yeah, yeah. I got back in the Zimbabwe dollar. I got them in my desk. I want to frame them. I have $100 trillion Zimbabwe bills, and one $100 trillion bill was enough to buy 3 eggs at the time.
Yeah, that's crazy, man. I mean, you see those pictures from like Weimar, Germany, when it's like the whole wheelbarrows full of German marks. It's just to buy some bread. It's crazy.
No. At that point, you might as well use it for your fireplace. You'll get more value out of that
Yeah,
than the bread.
yeah, yeah, yeah. You can't burn a Bitcoin, right, Jeffrey?
Well, I mean, you can't, but you can send it to a wallet that has nobody attached to it, so you can lose it.
Uh,
That's how they burn most crypto is send it to a wallet that's like dead or DEAD is it's hex code for it's just a wallet that a lot of people send stuff to and if we ever get this quantum computing stuff and it cracks crypto, all that burned coin could come back to life.
yeah, yeah, that'll be interesting. Someone was talking earlier about quantum computing. I forget who was dropping it, but Bodine saying that the old lady in the famous German inflation picture with the wheelbarrow of money was robbed, but they wanted her wheelbarrow. They did not want the money. So, yeah, that's how bad it gets. Um, very interesting. Uh, well, I think the takeaway from this, right, is uh we don't know what's going to happen long term, right? Will NVIDIA continue to buoy the markets? We do have OPEX. I guess, how do you guys find so we're in the basically middle of OPEX. Next week we do have like, I think we have an inflation reading next week, but then we have basically September 19th. Do you think that we basically just sort of stay course, maybe chop, maybe drift a little higher gradually, gently, softly, and then maybe roll over after this cycle's done in September, in mid-September, or does that not, or do you feel like that doesn't matter at the OPEX cycles?
Kane, you're
So
more on the gamma stuff,
yeah,
so
yeah. OpEx is oftentimes you'll see that if we do change direction, it often does happen at OpEx or immediately after OpEx. So that is like if we have a pullback, it could coincide with that point in time. You also have the rate cut expected right around that same time. So if we get
I'll
the
get
rate cut,
spicy.
we could see that pullback, and then, or especially if they decide not to cut the rate, then for sure we'll have that heavy pullback. So I think a reasonable case right now, obviously we can't predict the future, but a reasonable case right now is chop sideways, up and down. Sideways means maybe all the way down to the MA50. The MA50 is not even 3% away at this point in time. So that would, to me, would still indicate a chop sideways. Uh, or maybe float a little bit higher. And then if we get a stronger correction, it may happen around mid-September.
yeah, and one of the things, Kane, you may have talked about it, but you have gamma kind of pushes price into certain ranges, and when you get that large OpEx, it unclinches that those hands holding price in. That's what kind of allows us to move more freely after an OpEx.
Right. And then people if you're institutional, you don't just, oh, it expired. Now I have a bunch of cash on my hands. You're going to re-put your money into, most likely you're going to roll a significant amount of it. So then you're going to place it at different strikes. And then suddenly the market will move either higher or lower.
So like the takeaway is long term, it's going to be a spicy. I mean, we're not, we were talking about this before NVIDIA earnings that it's going to be spicy. We still have a spicy month coming up with 20 some days into September. Rate cuts, inflation data, um, options expiration cycle. So it's hard, making long term bets. You got to be careful, right? It's easier to do shorter, nearer term time bets, right, Kane? And you do that
Yeah,
every
yeah,
every single day,
or
basically.
very long-term bets.
Right, right, right. But how do you do the overnight bets?
Yeah, well, so the way that I like to think about it is, it's the old adage, right? And Jeff sort of touched on this a little bit when he was talking about, hey, economics is not quite the same as the markets, but we always hear and we always like to think that, hey, you want to, the old adage is buy low, sell high, or buy high, sell higher. Or another way of saying that is you want to buy something cheap and sell when it's expensive. Or you could, because of the way that we play options, you could buy something cheap and sell something expensive at the same time. So a lot of people,
Like,
they will turn to implied volatility in order to tell them whether something is cheap or expensive. The problem with volatility is that it's always relative. Is 100% volatility, is that high? I don't know. It just depends on what it normally is. If it's normally 150%, then 100% is not high. So it's very hard to just simply say, oh, if it's high volatility, it's expensive. If it's low volatility, it's cheap. So I've never seen anyone very consistently be able to use just implied volatility and say, hey, that's cheap or that's expensive. So for me, I like to use a different measure. I use extrinsic value inside the option divided by the number of days left to expiration. And that gives me a rough estimate of the price per day that I'm paying for that option. So if you want to find something that is cheap, then one easy way, so if you go into your option chain and you look at a, just say 1 month out expiration at
Do
the
you want to show them so they can see what
yeah,
you're saying?
yeah, better than just verbally. Let's do that. So let's go, since we've been talking about SPX, I'll just use SPX. Let me grab. So let's say we go out here 1 month, and I go to at the money. Should have chose something else so I wouldn't have to scroll forever. There we go. So this is, we're paying $75 in extrinsic value. Why? We're at the money. So basically everything here is extrinsic value. And we're going to go $75 divided by 21 days. So I'm paying $3.57 per day, roughly, if it was a linear basis, but for our purposes, a linear is just fine. $3.57 per day on average for this option. If I go over here to, let's say 0 DTE or 1 DTE, let's do 1 DTE. And I look at this, this is $16 in extrinsic value. You're like, wow, this is way cheaper. I can get in for $1,600 rather than $7,800. It looks like this is by far the cheaper option. But if we now take this measure and say it's $16 and whatever, 20 cents, divided by, I only have 1 day left. I'm paying $16.20 for the time value that is left versus $3.50. So this one is by far more expensive. It is about 5 times more expensive or 4 times more expensive than the one that is 1 month out. So one easy way to buy something cheap and sell something expensive is I can sell this 6485 call because that's relatively a lot more expensive than the same strike 6485, except it's out to September. And if I do that, we've constructed what is called a calendar spread. And calendar spreads, if I do it this way, now we can't always do it. So if I do, let's go SPY, for example. And let's do that 1 day away. Let's do the same thing. If I do the 647, I'm paying $1.77 per day because it's only 1 day. And let's just say I go a week out. And if I look at this, that's $3.35. So here, actually, it did work out. It's $3.35 divided by 7, that's 50 cents. So there's still a pretty good discrepancy there. So in SPY, what we see is that we can use this strategy pretty well. If we did, for example, NVIDIA, okay, and we said, or maybe not NVIDIA, maybe something that didn't just have, it might work out for me. If we do this right here on NVIDIA, 180, $3.27 divided by 8 days, that's about 40 cents roughly. And then I go 1 week out from that, we're paying $4.73 divided by 15 days, that's 31 cents. Okay, so it was about 40 cents and 31 cents. That's not a huge difference. So a calendar spread on NVIDIA is much less lucrative than the calendar spread that we saw on the SPY. And this is an easy way for us to capture on SPY. And if I just go 1 week out, okay, so if I did that, that was the one that I showed you guys. If I look at this, look at my break-evens.
I like option strat too. I think this is the best modeler.
Oh yeah, I love it. I love it how easy it is to manipulate everything. But over here, what we say is that in the next week, I'm getting break-even points at 643 and change, and then at 650 and change. And if we're expecting that over the next day, that's tomorrow on the expiration. So are we going to blast out of this range? Probably not, right? So because I can sell something expensive and buy something cheap, that becomes really lucrative. And look at my max profit versus my max loss. It's not super compelling right here, but that's for that wide of a range. If I can make 150 as my max, but what's my reward risk over here? I'll just call it 150, and let's make the numbers easy, and 250. Okay, that's a 60%. I can make 60% overnight, and that's if it doesn't go anywhere. But it can go all the way up to 651, which I don't think is within sight for any of us today. And it can go all the way down to 643.7, and I will still make money. That's just my break-even point. And so if I'm going to lose money, it's going to be hard for me to lose a lot of money. Right? It's got to go really far before I start making a significant percentage loss. So at 640, I'm still only at 47% loss. Yeah. And over here,
Because of the extrinsic value that you basically opened it with.
right, it's because the relative values of those two calls were so different.
Mhm.
And people generally don't have a good way of measuring that. Like if I try to look at that in terms of IV, it's, I don't know, right? I mean, what's the IV on this? I guess I could try to add IV. But it's
But IV in itself is not really telling you whether it's expensive or not, as you kind of let off with in the beginning.
right, exactly.
Right.
It doesn't tell me that much. So right here it says the IV is 11, and that's for September 12th. So that wasn't even the right expiration. But right here, it's telling me the IV is 12. So does that mean that the August, the earlier expiration is is just barely more expensive than all the way out to September 12th? You know, those are pretty similar numbers, right? So that it's not a great way for us to get a gauge on. So if I asked you today, I say, hey, this one right here, is that cheap or expensive? It's really hard. No one could tell me if it's cheap or expensive unless you have a good way of measuring it. And so the way that I came up with was that extrinsic value per day.
Very cool. So we got Bill, we got a few other people in the question asking, how do you do these? You teach people how to do it, don't you?
I do teach people how to do it, yeah, actually. This is the basis of my morning payout program. It's been a very, very successful program. We win about just under 80% of these, around 78.5% of these. We win overnight, and its profit factor is about 3. And people who have been in the program are just loving it, and they're making a lot of money, like very consistency. Yeah, the best thing about it is that it's very consistent. And each day I go in and I give people a trade where I look for these discrepancies where that price is mismatched, and we take advantage of that, and it gives us a lucrative trade.